What is going on, everyone? BGFX here. Welcome back to the channel. I'm coming at y'all with a brand new video, and this video we're going to talk a little bit about how to filter out a lot of the noise in the markets and kind of refine not only the trades but your mindset when it comes to picking the right opportunities, as well as kind of what I like to look for. So we're going to dive into USD Cad, look at some of the price action, look at why price did what it did. Then we're also going to look at Euro USD and Euro JPY, which is trades I took. Not the craziest trades, but there is a thought process behind it that I definitely think some of you guys can get some good value out of. So without further ado, let's go ahead and get into it. Alright guys, so we're right here on the 8-hour time frame for USD Cad, and I want to go ahead and kind of look at some of the price action and kind of reflect on it just for education. But let me go ahead and throw my zones right here on the chart. Now you can see this was a very solid supply area, or you can call it an order block. Now you can see that we had this wick here, we had this little consolidation before a strong drop off, and now we are returning to the origin of that move. Now if we come down to something like the 4-hour just to get a little bit more detail, you can see that this was a range overall. It wasn't a type of trade where you see the range, then you pull liquidity off the high and then that becomes like a point of interest. This was more of just like an actual range, which even though it's just only a range, since it's on such a high time frame, for me it could hold some type of significance. So let's go down even more here to the 10-minute time frame to take a look at price action and overall what it did and why I believe what it did. You know, we can kind of reflect on this and get better from it. So we can see that we have this current high in market structure, and this high was coming off of the zone that we looked at on the 8-hour time frame. So to start things off, you could already see how we've refined to kind of build a general bias of price. So that's what we're going to be doing first. We're going to be looking at the zone itself and creating a bias off of it. So that's something that I like to do a lot when it comes to the markets. I always ask myself, you know, why is this our current high in the market, or why is this our current low? But the reason I do that is because you'll see highs and lows pulled so much in the markets, and typically that's where people will want to be trading the most. So quote unquote manipulation, you'll see it around the highs a lot. You know, you'll see a lot of short-term highs relative to long-term highs and those type of things. Now I wanted to ask myself, why was this our current high? This was simply reaction coming off of an 8-hour zone. So now I want to ask myself, what will my bias be? My bias will most likely be to short. However, it doesn't always have to be to short, but you can see that we did have a reaction coming off of it. And now all I want to do is I want to be looking at the micro scale of things and looking at why price is doing what it's doing. And it's going to leave me small clues to potentially pick a direction or potentially pick the best time to get into a trade. Now we're on the 10-minute. Let's go down even more and look at some of the zones after we make our current high, which gives us potential clues as to what can basically happen next. Now you can see that we make the market structure high, we have the reaction off of that supply zone, and you can see that we have pretty much almost like a triple top here. We have a little buildup of liquidity. Now we ended up impulsing a little bit more to the downside. We break this level of structure here, and then what we do next is we begin to range. Now we range up just enough to test back into this level right here, which once again could be looked at as an area of supply, or if you want to call it like an ICT order block. But we did show reaction off of that. Now this was going to be our break of market structure to the downside, and then once again you can see the reaction coming off another area of supply. But in the midst of all of this happen, the main thing here is to be analyzing what price is doing and why is it actually doing it. Because I've seen people, and I've also gotten questions from people that say like they'll look at a trade and they'll see reaction from a zone, but they'll see all of this stuff occurring here in the midst of their trade, and it'll kind of throw off their thought process. So the whole purpose with this video here is to kind of help you understand a little better that when price is doing these things, when it's ranging longer than usual, what you should do here is you should refine and you should look at why price is doing what it's doing. It'll actually give you a lot more mental clarity when it comes to viewing price action. So you can see that we had the range here, we ran up into the zone, and then we finally broke market structure. We traded back up again, we touched this level of supply, and then we basically rated this low again. Now something that I would highly recommend is looking at the times that we take these lows out. So in this case right here, this is going to be 237 that we rated this low. So that means that this is London session pulling this low before coming back up into a new market structure high again. Now what you see right here is equal highs being made in the market. So once again, that's another thing that you could take note of when it comes to kind of analyzing a bias. You know, if you have a zone up here, for example, coming to the 5-minute, this is a very fresh zone that hasn't been mitigated yet. So now you have your overall bias that you want to short. You're looking at the things that happen in between the equal highs. Also, this little descending level right here, somewhat of a trend line ranging before we break back down. When we break back down, actually, you can just take a look to the left here, and obviously we come to something like the 3-minute. This was another order block, you know, before we end up running back. So this order block was the fuel to take liquidity back to the upside. Now you could have done like a buy to sell opportunity where you took longs at the order block, sold up at the supply area up here, and then it would have been a winning trade. But if my bias was for shorts, I would most likely just be looking for everything to line up with my bias, right? So we see that that low was made, we tested the order block, and if we go ahead and we rewind this, actually you can see that almost everything was setting up here for liquidity to be taken to the upside by this order block. Now our overall bias from this being our market structure high is refined into this area of supply right here, and we're basically taking all of these little clues to actually throw it in confluence, right? So we can see that we have the reaction there. And then another thing is, if we look at the time, right, time is usually correlated with these spikes in liquidity. But you can see that New York is right here as we're ranging, and then 848 New York volume actually kicks in, and that is our spike above those highs. And obviously, you know, someone who trades smart money would have took these shorts right here on what they viewed as an order block or a potential level of supply. Stop loss would have been somewhere around here. I'd say 6 pips, give or take. You know, for me personally, sometimes I like to put it above the high. It all depends on what I'm actually looking for. But the overall thing is that you're not viewing all of this ranging as noise or waiting or second guessing yourself, but you're using the extra price action as clues that line up with your bias, and that could actually give you more confidence in your position. You know, try not to second guess yourself too much. Don't use the idle time in between a trade to overthink. Use it to actually analyze price for what it's actually doing. And in this case, it was just building up liquidity. It was mitigating zones, you know, it was pulling back, and that was the final run. So that's probably going to be one of the main tips I can give to anyone who tends to overthink their positions a lot, is just related to your the concept that you trade as much as you can, you know, and it does really give you clarity instead of just waiting, you know, blindly for the spike. You draw these things out, it will help with confidence a ton. Now when it comes to actually securing profits, one thing I would keep in mind, right, is this right here. You see how we have this range? Once again, this is a range. It wasn't like we pulled liquidity before. So we basically do have liquidity above this range that can be grabbed. So what I would do here is, if you did short off of this high, make sure you pay attention to reactions around your new demand zones, because those demand zones could be the fuel for a new market structure low to pull liquidity back up above the range right here, which is always a possibility as well. Know when you should be in a trade for the long term, and know when you should be in a trade for the short term. Don't just target lows because the risk to reward looks nice. Always pay attention to some of the micro details. Like in this case, we had this range, and once again, this 4-hour zone as well. This isn't really like a free signal or nothing, but if price does come up to here, then I'll be watching for shorts. And even if it's, you know, 80 pips of reaction, that would be good with me, right? So that's just one thing I'll be looking at for USD Cad. But that was the overall breakdown for USD Cad's price action in general. And I like to do this pretty much every weekend, but looking at liquidity in the meantime in your position will usually give you a lot more confidence. Now let's move on to Euro USD, which is a trade that I took here. We're right here on the 25-minute time frame, and let's actually go into the Telegram really quick so you guys can see when I did take this. So August 2nd was when I took it. You can see this was my markup right here. I was mainly looking for these shorts. I did do a sell limit, and you can see that we triggered our zone. We did react a decent amount. Beautiful reaction from our zone. Then we did have, my entry was around 1894 area, and then we melted off even stronger right here a little bit later into New York. And then, EU running 20 plus pips, my stops are going to break even, and then nearly running 30 pips in profit. Daily fees will be here, so I'd recommend locking small profits in just to cover this plus a little extra. So I did lock just a little bit of profits in, and then the rest of this trade got taken out at break even. But let's go ahead and take a look at the idea behind why I actually entered this. So if we take a look at where we are right now, I asked myself the same thing, and I said, look, why is this our current high in market structure? If we go ahead and we take a look to the left, we can see that we had this previous swing point, right? If we take a look at this high here, we can see that it broke this previous high, and then this high here actually failed to rally up into the zone. So what that was telling me is that one of three things are going to happen now that we break the high. We're going to break the high and continue bullish, or what we'll do is we'll view this high as just an inducement, and then we'll see price roll back over to the downside again. So you can see how as we begin to transition into the market structure high, we have what some people would view as a break of market structure. But for me, this was not a true break of market structure. This was basically just an inducement. This was a break of low to trigger sellers into the market. And then even as we retrace, I would imagine that some people would look to sell right here. However, the reason I would not recommend selling at this first structure is because, once again, we didn't pull the previous high yet. We were actually trading right there up above the high. And when we look at the actual volume that pushed up, I mean, you look at the size of these spikes, it only makes sense that you wouldn't want to trade on a minor 10-minute break of structure. You would at least want some type of liquidity, some type of play on liquidity. And then that was a true break of market structure here, which ran to the downside. And then here we have liquidity being built up through a trend line. And then also, if we come down to like the 5-minute, you can see another minor run on liquidity. Just view price from your overall bias, right? My bias was for shorts. I can see that we were ranging under my initial point of interest. We run liquidity here. This is where my entry was, right after the liquidity run, right after this high was rated. Then we ended up selling off, generated liquidity again through these lows, end up selling off again. Now, I did get stopped out of this trade at break even. If we go ahead and we take a look at, I believe, why I got stopped out at break even after securing a little bit of profits, it's because we started generating liquidity right here at the third touch of this trend line. We run the trend line, then we end up selling off. Now, Euro USD did literally melt here, and I'm gonna go up to the 4-hour just so I can get there quickly. But this trade absolutely melted after pulling the previous high, which is what I did anticipate. It's just I did get stopped out at break even a little bit sooner than I wanted to, which is always a possibility. You know, when you move your stops to break even, of course you're gonna have the benefit of a trade 100% not being a loss, but it is possible that you can get stopped out at break even and miss out on the move. But we did secure a little bit of partial. So entry was here. Now I want y'all to take a look at this spike right here, okay? And if we come over here back into the Telegram really quick, you can see that I had this as the last point of invalidation, this little zone right here. Now the reason was being that we had another zone that was unmitigated. We also had a lower time frame QML, and if we take a look, that final spike was actually into the origin of this zone, and that's when we finally took the high. So you can see how we reacted to our overall zone. We made the market structure high after pulling lower time frame liquidity. This liquidity was generated, it was generated again, generated again right here, then we took out this high, as well as this high, just to come into a zone that wasn't mitigated, which just goes to show that the characteristics of these pairs are often very similar when it comes to manipulation. Like I said, my entry was here. Didn't really expect it to run back up, but it was NFP week, and it also was the first week of August, which is known to be a little more on the choppier side. So let me scroll up a little bit more here in the chat of a trade we took last week, which is on Euro JPY. This was actually literally like a micro pip away from being stopped out, but it did respect the QML a little bit higher than the QML, which just goes to show, you know, having different concepts, having your supply demand, your order blocks, but also different zones, so you know where your point of invalidation should always be. But to go ahead and take a look at Euro JPY, this is going to be the shorts. Long-term bias was to look for buys from the QML, and I'll actually go here to Euro JPY. This is the QML that I was talking about, so I wanted to look for buys here, but I was actually looking to short down into the zone, so it could be like a sell into buy opportunity. And that's something that we actually did, right? So my entry was going to be like somewhere in the zone. That's where I ended up entering at. But we did have the range here for Asia, and then we induced orders for London into the high of the day, and then from there we ended up reacting from another zone the week after. That was after the weekend. So I ended up closing my position at around 20 pips. Let's go down a little bit more. So if you're still in Euro JPY after these last couple of hours of ranging, it's up around 14 pips. It was micro pips away from the stop loss. Make this risk free if you're in it. You can take small partials, and this was it right here. And then I said I'm not taking any partials yet. I like to see below the Asia range grabbed. Now if we go ahead and we take a look, the Asia range was here. So I wanted to see price break out for London, make a temporary high, and then see that high ran, and then see the melt. But that's actually what happened. We just made consecutive highs, and then we ended up selling off. So like I said, the Asia range was here. We absolutely melted through the Asia range, but it was the next week, and I'm not someone who holds trades over the weekend that often. So these were the shorts. And then let's see, GU zone was called as well in a video. I like to do little outlook videos where I talk about like different zones I want to see reaction to. Now this was the two liquidity pools I wanted to see broken out of before the sell. So it kind of goes back to seeing market structure make temporary highs relative to areas of liquidity. And then we had the short, the sell off there, but I actually didn't sell. And then Euro JPY was secure for 20 pips, literally like a little bit, maybe a little bit more than 2R, just around 2R. And then everyone enjoyed the weekend. And then we took these Euro USD shorts right here. So that is pretty much it for the video, guys. I just kind of want to go through a couple of trades that I took, as well as just talk a little bit about understanding inducements in the market relative to when new sessions start. A lot of times you'll see highs ran just so liquidity could be grabbed, and those highs will end up being some of the best trade opportunities. But the thing is that a lot of times when you see those spikes in price action, if you're really invested in the market, your heart might start racing a little quicker than usual. So it's crucial that that you just allow yourself to think clearly. And of course, this all comes through practice. It's just kind of one of those things where like fear kills intuition, you know. So try not to let those spikes really frustrate you too much. Just look at price for what it's doing. But that is it, man. It's been BG. I just wanted to post a little video for y'all this weekend here on YouTube. And then another thing with USD Cad that I forgot to mention, we have this low, another consecutive lower low, and then let's see what happens when that occurs. Let's see if we get a strong spike coming. There's going to be that spike there down through those consecutive lows just to clear up that liquidity. And then of course, if we're looking for long-term buys, look for these zones to target back up above the range. That has been it, guys. It's been BG. I will see y'all in the next one.